BBB Power Chat. This is really a webinar series where we speak to an expert every month about a topic that's really timely for your business. And today we're speaking with professional chartered accountant Nicholas Coburn from Strategy, which is a virtual accounting firm that you can access from anywhere. He has over 13 years of experience with government audits, financial and tax reporting. And so welcome, Nicholas, and all the attendees that are joining us today. And as this is a 30-minute presentation, we're going to allow some time, obviously, for the presentation and then some time for questions. So if you have any, feel free to put them as we go along, and then we'll take some question and answer at the end.
Excellent. So thank you, Monica, for the introduction, and thank you to BBB for the opportunity to speak to businesses today about some of the economic stimulus programs that have flipped the calendar with the new year and lots of changes abroad for those. So happy to speak to them. And we'll also touch base on a few tax planning options that as you wrap up your year end, good things to consider, obviously, for your business as we kind of push 2021 to a positive cash flow position. And we do have an item in there as well for your employees, because there's usually a hot button topic in terms of employees working from home and how that's turning out for their 2020 tax return. So we'll dive right in. An excellent resource that I use to stay on top of the changes, because they are many and each period kind of brings some new ones, is that I Google Canada's COVID-19 economic response plan, or typically now I just type in Canada and economic response, and I look for this URL, look for URLs at startcanada.ca, and you know you're in the right place. I added some just print screens. Once you're in there, you're going to see a nice hyperlinked table of contents that splits it out for individuals, businesses, different sectors, lays out all the programs. So we're obviously not going to be able to speak to all of them. We focus today on kind of subsidies and interest-free loans, but there are other financing options that are there that I want to make sure that you are aware that if you're just looking for a list of all programs, whether you're sole proprietor, corporation, individual, they are there. Once you click on the program, so I've clicked on wage subsidy here, you'll see right away that they list all the changes. So there's changes as of this month, as well as the previous changes. And then on the right-hand side, you'll see an excellent just step-by-step hyperlinked approach. You don't even have to click on the side. You just go to the bottom and keep answering the questions. They'll take you to the next page. You'll go through who can apply, what's eligible, what's not eligible. And then there's also excellent calculator tools. So there's actual calculators there that factor in all the changes. There's spreadsheets. So for the wage subsidy, for instance, if you have many employees, you're going to want to use the spreadsheet, and it has all the changes built right in. And then it walks you through how to apply. So I will say, for all the programs that we're talking about today, you want to make sure that if you're an individual, you have access to your CRA My Account. Likewise, if you're a business, you have access to your My Business account with CRA, or you have a representative that has access. And you've taken the time to make sure your direct deposit is up to date, because that is the most efficient way to apply for all these programs. And it's the most efficient way to get paid. Typically, you're looking at a couple days for direct deposit versus a couple of weeks, and then delayed with postal mail coming out of the CRA. So that is my advice in terms of how to apply. Then we will get right into the first program. So the wage subsidy, lots of changes. I would stress that if you haven't applied, because initially it was that you had to have a 30% decrease in revenue, that has gone away. So basically from period 5, which was the beginning of July, and forward, if you had any decrease in revenue, then you're eligible to apply for this. So that is the key change, because I think a lot of people I know I spoke to at the beginning of this is like, well, we're at 20%, we're not at 30%. Well, that's gone. So if you're at 20%, definitely apply for this. If you haven't applied for 2020, you have until January 31st of this month, which is this week, to catch everything up. After that, it's 180 days after the period closed. So you want to make sure that you can retroactively apply, but make sure you do that. For period 11, which is now into January 2021, because your calculation is based on either the month that you're in or the prior one compared to a comparison period, which is typically 2019. Well, now we're into 2021, so the comparison period is 2020. So at least for January, so I would keep checking on this, but at least for January, the periods or the months that you're using as a comparison are November and December 2020 compared to this November and December 2019. Or if all year long you've been comparing to a January, February average, again, you can choose the calculation that's best for you. But anyway, I wanted to say for 2021, the comparison periods that you're using as your 2020 base is November to December 2020. The rate itself is now back up to 75%. So we have in the bullets there in terms of what revenue drop you need to get the 75%. I do want to say though, like you can see the revenue drop, as long as you have any revenue drop, you're basically if it's less than 50%, you're multiplying your revenue drop by 80%, and that is your subsidy rate. So that if you have gross wages of any kind and you've had a drop, multiply the drop in revenue by 80%, and that's ultimately what you're going to be applying for. I did also want to say, especially in this area, there's a lot of contract manufacturers or contract R&D, which maybe have a foreign parent, and you're on some sort of a cost plus arrangement. And since that cost plus arrangement is kind of written in stone, you maybe feel like, well, I don't have third party sales, so it doesn't apply to me, but we've had to lay off and we're still under this cost plus arrangement. You can elect to use the foreign parent's third party sales as your measure in terms of revenue drop. So just keep that in mind, because I also have had clients that their cost plus has stayed the same because their contract research and development, but their US parent has 60% drop in sales. So definitely this program, if you have payroll and have had any drop or related parties had a drop in sale, it's for you. And then lastly, we just sort of point out how to apply. Again, you want to go through CRA My Business Account. That is the fastest way to get your application in. There is a hyperlink to a third option, which is a WEBS form application, but strongly recommend to go through CRA. And then we also have a hyperlink to the spreadsheet, but again, that URL that we provided will get you there. And given all the changes, I really recommend that you want to use these spreadsheets because they factor in all the changes right from the beginning to current. Now the next subsidy, this was a new one in the fall. It commenced in September. It's a 65% subsidy for rent that you pay as a commercial property, or if you own a business and you're operating it for commercial purposes, you can use property tax, mortgage interest, and insurance as your base instead of rent. If you've been forced to close due to legislation, like we had before Christmas there, you can actually earn an additional 25% or up to 25%. So that would basically cover 90% of eligible expenses. So your rent, or again, if you own the business, property tax, insurance, and interest. Any entity can apply. So business, not-for-profit, charities, you just had to have a CRA number by September 27th. Essentially, it's kind of capped at $75,000 per period per property, and then if you have multiple properties, it's capped at $300,000, unless the top-up rate. Again, if you're forced closed, then you can get a little additional amount. And again, it's rent to third parties. So I wanted to stress that. So if there's lots of people that like to have a holding company and have investment properties in those holding companies, and essentially maybe, so here's the example. You have the holding company, you own a property, and then you have a retail store that's been forced closed and they're paying you rent. If you don't own that retail store, you just own the property, the retail store is the entity that claims the subsidy. You don't get to claim the subsidy for the property tax, etc. However, if you own the holding company, but you also own the retail store and the retail store is paying the holding company rent, you can't apply for the rent, but you can apply for the business expense or the building expenses. So property tax, mortgage interest, and insurance. So that's a key. You got to know basically who's paying you. And if it's a third party paying you rent, you can't apply. If it's a related party, you need to apply based on the business or the building expenses. So that is key. In terms of the periods, the first period open was September 27th, and that period closes April 22nd of this year. So again, it's 180 days that you have from the end of the period. The expenses that you're claiming for have to be for that period, and they had to be part of an agreement that was signed as of October 9th. So if you had a rental agreement, a lease agreement, or a mortgage, it had to be in place before October 9th in order for those expenses to be eligible. How to apply, you want to go through your CRA My Business Account again. You have to obtain a CERS number, which is obtained directly through your My Account. It's a quick process. They just need it so that you can basically, they know that you're applying through this account versus the wage subsidy. Wanted to point out as well that it's not based on expenses that have been paid. It's also that are payable. So in terms of operating towards positive cash flow, if you have an agreement with your landlord or what have you, that you can defer the expenses, you can actually apply for the subsidy, get the money, and then you have 60 days from receiving the subsidy to pay off the amount that you claimed for in order for it to count. So it is a way to basically get the subsidy in-house before you need to settle the rent or mortgage interest, etc. So it's a good program. It's one that you can kind of piggyback with the wage subsidy. The other program that's out there that we definitely want to touch on is the Canada Emergency Business Account. This was the $40,000 interest-free loan, which is now a $60,000 interest-free loan. So if you initially applied for $40,000, it's a relatively quick process to get that additional $20,000 top up. Once you have the $60,000 loan, if you pay $40,000 of it back prior to December 31st, 2022, $20,000 of the $60,000 becomes forgivable. So it's money that you keep and you don't have to repay. The one caveat is, if you've applied for this in 2020 or 2021, that is the year that you actually have to recognize the forgivable portion in your tax return. Same with the subsidy. So if you've got a subsidy that you've obtained in 2020 or 2021, you have to have it on your tax return for that year. And then if it was a case that you ended up not paying back the loan by December 31st of 2022, you take a deduction for the same amount in that tax return. So key variable there. This loan was initially based on salary that was in place in 2019. They then adjusted it to, for those that don't pay themselves salary, to include $40,000 in non-deferrable expenses, which include rent, utilities, insurance, property taxes, mortgage payments. The caveat here, however, is that they needed to be paid in January, February of 2019, or they needed to be part of an agreement that was in place on March 1st, 2020. So unfortunately, if you entered into a mortgage agreement after that date, you potentially would not qualify for this loan. So it can become difficult if you don't have salary to be able to qualify for this loan. But if you find yourself that you meet the $40,000 criteria for non-deferrable expenses, you definitely want to make sure that you've done some assessment in terms of, if you've already applied for subsidies, those subsidies count against you. So it might drop you under 40,000, and then therefore you might want to have the analysis. Is it better for us to get the 60,000 interest free, the ability to retain 20,000, and then pay back the subsidies if it's going to result in you not being applicable to get this loan? So it's a good program. Definitely excellent if you have wages. If you do not, it becomes more difficult to obtain. But it's worth an analysis, especially if you are in the non-deferrable expense front, that you determine if any of your subsidies should be paid back, because most likely it would be better for you to get the loan. The next one we wanted to touch on was a subsidy, a benefit for self-employed individuals. So a lot of these programs definitely are geared towards corporations and entities that have payroll. If you're self-employed, there is a benefit that basically, if you're ineligible for EI, and even if you're an employee and you're not maybe new to Canada and you're not eligible for EI at this time, and you've been laid off, you can apply for this benefit. It works out to $500 a week, less 10% withholding tax. The program started in September 27th, but I believe the period that's currently open, or the earliest you could apply, is in November. To apply, you go through your CRA My Account, and we also have some 1-800 numbers that you can call. There is a host of eligibility. The key ones, I mean, most of them are just that you're resident in Canada and you're over the age of 15 and what have you. But some key ones to note, basically, again, are you eligible for EI? If not, this is for you. If you've had to stop work, but essentially you can still earn income and have this benefit, as long as you can show that your weekly income has dropped in 2020, or the current period that you're applying for, compared to the same time last year. So if that's the case, and you can earn up to 38,000 and you're still less than 50%, or I guess more rather than 50% or income drop, you can still have that income plus apply for CRB. And when you're applying for a 2-week period, and you apply the Monday following the 2-week period that you believe that you're eligible. So if it's for the next 2 weeks, you would apply in 2 Mondays from now. And if you're eligible, you have to keep applying. So it's each 2 weeks, you have to determine, am I eligible for the next period? And you can apply up to 13 periods or the equivalent of 26 weeks. So it is a program that's available. Again, you can still work as a self-employed individual up to 38,000 before there's any repayment. And it is something to consider. Another key eligibility requirement, if you're off work, I would strongly advise that you do not travel internationally, because it can result in you being ineligible for CRB. So I know that there's some that they're off work and maybe they have a family member in a different country that's sick and they think it's a good opportunity to go take care of them. That's very noble, but in terms of this program, there is a risk that you won't be eligible when you return. So something to definitely consider, but in terms of being self-employed, this program, if you do not qualify for the others, is probably your best program for cash flow. The other programs we wanted to just briefly touch on are the Black Entrepreneurship Program. These were 2 programs that were announced in October of last year. The first program, unfortunately, is already closed, but it was designed for not-for-profit entities that essentially help organizations be created and to grow and to basically mentor them and network with them. It did close December 21st of last year. However, it's a new program. I would be surprised if they're not new application windows. So we have a URL there for the previous program. If you are an organization like a incubator or like Communitech or whatnot in Kitchener-Waterloo, those types of programs, it does have to be, well, it has to be either Black-led, not-for-profit, or that you partner with another organization. These programs should reopen. The BEP Loan Fund is for-profit organizations that are, well, rather for-profit corporations, entrepreneurs that are Black-led, and there's going to be funding available. However, this program is not open yet. So more details to come, and there hasn't been a application or any details that have arisen yet, but on the initial URL that we provided, these 2 programs are there. Sorry, the second program is there. The first one's been removed, but I, again, would be shocked if it doesn't return in a new application period, because it was about 4 weeks that you had to apply for it. So I'd be, yeah, it's got to come back. So keep your eyes peeled for that. The next section I wanted to touch on are tax planning opportunities. So again, December 31st is a year end for many. Identify those specific accounts receivable. I'm sure in this year there's unfortunately many customers that have balances owing that possibly can't pay or they're in question. Put them into an allowance for doubtful account. What that does is it keeps it on your balance sheet. So if they pay, that's fantastic, but you can take it as a tax deduction in 2020. And when they pay, then you add it back. But take it as a tax deduction, reduce the amount that you have to pay for tax in 2020 or create a loss, carry it back, get a refund. Same thing for inventory. If you have inventory sitting there that you're unable to use, it's most likely declined in value. So write it down, create a tax deduction, same thing, lower your tax paid or carry it back. You also want to make sure that you're just keeping on top of your tax installments, not only paying them on time, but make sure that 2020 most likely was a bad year. So make sure you're basing your tax installments on that year so they're lower. But if 2020 you got through and it was decent, that's fantastic. And maybe with closures at the start of 2021, it's kind of created a situation where 2021 is looking a little worse off. Then you make sure you flip, because you can base your tax installments either on the current year or prior, whichever creates the lower tax installment. If you had co-ops last year or you had research and development, those typically are refundable if you're a Canadian controlled corporation. So even if you were loss making, you're going to get money back. So make sure that you file your return as soon as possible. And also we just threw in there stock-based compensation is usually tax favorable mostly for the recipient. So typically it's more attractive and you can typically put it in place and have a especially in these days, less salary committed to that individual. So if you're looking at bringing in some talent to help turn things around, consider stock-based compensation. There's lots to consider with this, but it is a way to attract talent and not necessarily have to pay the same level of salary. Employees. So there's been lots of questions about employees that work from home. Can they go the T2200 route, which is essentially writing off certain employee expenses? You can. For employees that were home for at least 4 weeks consecutive in 2020 and work 50% of the time from a home office, they can essentially use a simplified method. So it's $2 per day in 2020 that they had to work from home, up to $400. And if they choose that route, they don't have to have a T2200 signed by their employer. They just put $400 on their tax return as a deduction. And then there's a form that we listed here, Form T777, but the new form is actually T777S. It's a simplified version. So if you are doing the $400, you just need to fill out the top box on the T777S, and it just says how many days of the year did you work from home times 2 to support your calculation. So max at 400 or 2 times however many days you're at home. If you feel like 400 is not sufficient in terms of the level of expenses that you did have to incur, then you do go the T2200 route. You have your employer sign it that yes, you had to work from home, and then you still fill out a T777. It's just there's a more detailed version below the box at the top, which lists all the expenses that apply for you. So basically the question has been answered that yes, if you've had to work from home at any point in the year, I guess as long as you can at least show that it was 4 consecutive weeks at some point, you should be able to get at least $400 on your employee's return. And then also for entities that have multiple entities, sometimes you have an entity that's doing quite well and another one that's loss making, and those losses are stuck there because we don't have consolidated reporting in Canada. There are ways to move the losses to the profit entity. So a typical way is just that you essentially set up management fees from the loss code to the profit entity, or you can do things with the assets you have, sell them from one to the other and lease back, creating an expense. We also quickly outline a plan. There's lots of detail to this, and you need to get a bank involved, at least for one day. But there's actually no leakage in terms of an expense to the bank or interest to the bank. It all happens in one day in terms of setting it up. And then the end result is that you have interest income in the loss entity and an interest expense in the profit company. And then it's paid through dividends and interest payments. So it's just a circle of cash between the two entities. But what it does is it moves profit into the loss co, essentially eating up those losses, but also reducing the tax that you have to pay in the profit entity. So there's a lot there, but there are things that you can do, or at least consider and have the discussion in terms of your entity and your employees. And again, we put our contact information in here. If any of this was, we have that situation, but I have no idea what you're talking about, I would be happy to just give you a lot more detail in terms of what you can take away to make an informed decision in terms of whether anything applies. So yeah, you have our contact information there. Happy to answer any questions that you may have. And again, thank you to BBB for this opportunity.
Thanks so much, Nick. That was a great presentation. A ton of information, but I like the fact that, whether it's single entrepreneurs or businesses, there's different options that they can consider. So I'm just taking a look. There were a couple questions that came in. One was, are there any changes expected on the opening date of payroll account for the CEWS?
Sorry, so changes on the opening?
On opening date of payroll account.
On opening date of payroll account. So no changes. So sorry. So the initial requirement was that you had to have a payroll account open as of March 15th of 2020. So at this time, there's been no change for 2021, but that is a fair question because that was something that I've been wondering in terms of as we roll into a new year with the CEBA loan, essentially if someone's entered into a new agreement or whatnot, or they have non-deferrable costs, but it was after March 1st of last year, will they create kind of a new window? At this time, they have not updated any of those initial requirements. So basically, if you didn't have a payroll account in place as of March 15th of last year, you most likely would not apply or be eligible. But I can definitely look into that to confirm. But as I'm aware at this time, it is that it had to be in place as of March 15th of last year.
Okay, there's also a question about the slides. Absolutely, anyone who's attended this webinar will get a copy of the presentation that they can also reference. A couple of the questions. Are sole proprietors better off getting the business bailout options if eligible, or just CRB?
Definitely, if you're eligible, there's more opportunity to get funding through the other programs than there is through the CRB. The problem is, as I went through this with another individual, for most of the programs, you need to have a payroll account. So, for instance, the wage subsidy and the CERS rent subsidy, that's based on payroll. Well, it's based on revenue drop, but you have to have a payroll number as of March 15th. So I noted that specifically here because I thought that was odd for the rent subsidy that you needed to have payroll in place. But that is a requirement for eligibility for both of those programs. For the CEBA loan, again, you can get away with not having payroll, but you have to hit that 40,000 deferred cost. So that can be difficult. And there is another regional relief and recovery fund that we didn't speak of today, but it operates similar to the CEBA. And the only issue with that is it's basically, if you've had difficulty getting to that 40,000 level, you should most likely be able to apply for this fund. It's just that in order to be eligible, you have to essentially have been eligible for the wage subsidy and the rent subsidy. So if you're not eligible for any of those, then you're not eligible for this relief fund. So typically for a sole proprietor that doesn't have wages, you're most likely looking at the CRB as your only benefit. But definitely explore the other ones, because if you can get into them, there is more dollars there in terms of what you can get versus $500 a week. But I would say try your best to at least do an analysis whether those programs are available to you, and if not, the CRB should be.
Okay, so a couple other questions. If I haven't applied for the CEWS yet, which method is the best to use to calculate my wages?
So I would follow the link to the URL in terms of getting the calculator. So if it's just you, there's a calculator there that walks you through the whole calculation and will factor in the adjustments. If you have multiple employees, there is a spreadsheet for each period, and you just enter in essentially gross wages, your gross wages before like March 15th, and then what was paid. And when you're filling out the calculator or the spreadsheet, you basically have an option of completing it on a weekly basis if you have that information, or bi-weekly. And if you have monthly pay or something other than biweekly and weekly, you essentially gross it up on an annualized basis and then choose to divide it by 52 weeks, or the weeks that you're paid for, or on a biweekly basis. So you can choose which method you want. It's typically, if we're essentially paid over a period and it turns out to 10 weeks, I would annualize it and then divide it by the 10 weeks and then report on a weekly basis. Just seems to be a little bit easier than trying to figure out the biweekly. But yeah, you can choose either of those options. And again, if it's just you, the calculator tool is excellent, and it produces a report that you can print and complete the application. And similarly, if you have multiple employees, use the spreadsheet, and it too spits out a result that you can just go in and enter very quickly within your CRA account.
Okay, and I think we spoke a little bit about this one, but I'll ask it in case there's some more information. So it's talking specifically about the 10% wage subsidy and how it ties in with the CERS.
Yeah, so the fact that they mentioned 10%, I'm going to answer the question in two responses. So the first, your wage subsidy, if we're talking about the 75% wage subsidy, it ties into the CERS in terms of, there's separate subsidies, so you can apply for both. They are based on revenue drop, so it's a similar calculation. It's just that the 75% wage subsidy has gone back up to 75% versus 65% on the rent subsidy. So you're going to come out to a different result, I guess, in terms of what the subsidy rate is. But you can apply for both. Now, the fact that the question listed 10%, I'm going to answer that in terms of if you're applying for the CEWS, so the 75% wage subsidy, and you've already applied for the 10%, when you're online with the CRA completing your application, there is a box to say, did you previously apply for the 10%? And if so, you enter in the amount, and they'll reduce the subsidy that you get. So the max that you can possibly get in terms of a wage subsidy is what the calculation is for the CEWS. So if you've already got 10%, you're looking at reducing the CEWS by that amount.
Okay, perfect. So I think I'm going to pause it here. And as I mentioned, we will be sending out the slides in the presentation, and there's a contact information there for Nick as well. Thank you so much for everyone who was able to attend today. We hope that this presentation was useful for you. And as I mentioned, this is a monthly discussion that we're going to have with various experts that can help you throughout your needs as a business, especially during this time when we're thinking about all the constant changes that we're having. So thanks for attending, and I hope you have a great rest of the day.